Imagine this. You're a business owner, and your employees are late, lazy, and dragging the company down. Sound familiar? Dan Kennedy, a millionaire, marketer, and business guru, wrote The Ultimate Sales Manager's Guide, which is the actual name of the book that contains these hard management principles precisely for such cases. This book is not about gentle head pats and motivational speeches. It's about how to squeeze the maximum out of people, time, and money so that your business generates profit, not headaches. Kennedy teaches you to manage firmly but effectively, and he does it with cynical humor and ruthless honesty. Kennedy himself rose from poverty to millions, managing people and businesses. So his advice is not theory, but a distillation of real-life experience. Interestingly, the author admitted that many of the book's ideas were born from his own management mistakes, where he lost money due to excessive softness. The book became a bestseller because it offered not the popular soft methods, but the hard truth that businessmen wanted to hear. If you are tired of employees who just pretend, or of endless excuses, this book will give you the tools to take control of the situation. Kennedy doesn't reinvent the wheel. He takes real experience and turns it into a system. His approaches sound harsh, but they save businesses from chaos. Part 1, back to basics. Rule 1, the only reason to hire people. This chapter immediately sets the book's tone. You hire people not for friendship or charity, but to generate profit for your business. Kennedy stresses that any employee must justify their existence in the company with specific results. An employee is an investment, not a burden. Every penny spent on salary must return in the form of profit. Otherwise, hiring is meaningless. Focus on the result, not the process. Evaluate people not by their efforts or charisma, but by what they have actually done for the business. Establish clear expectations from day one. Immediately state what you expect from the employee so as not to waste time on misunderstandings. You open a coffee shop and hired a barista. Instead of just telling him to make coffee, you set the goal. Sell a minimum of 50 cups a day. If he doesn't do it, you look for a new barista who can. The chapter teaches you to view employees as a tool for achieving goals, not as family members. This is a tough but practical approach for business. Rule 2, why work should not be fun. Kennedy debunks the myth that work should be fun and enjoyable. He argues that attempts to make the office a second home distract from the main goal, making money. Work is a place for work, not for relaxation. Give up unnecessary entertainment like corporate parties or game rooms if they do not affect profits. Focus on goals instead of comfort. Direct employees' energy toward completing tasks, not toward creating a cozy office environment. Tough discipline instead of a relaxed atmosphere. Introduce rules that keep people on their toes, not relax them. In your company, employees spend an hour on lunch and chatter in the break room with foosball. You remove the foosball, reduce the break to 30 minutes, and set the goal. Close 10 deals a day. Sales grow, and the wasted time disappears. The chapter reminds you that business is not a daycare, and excessive softness hinders efficiency. Kennedy prioritizes profit over pleasure. Rule 3, what an employee costs. Here, Kennedy explains that the real cost of an employee is not just the salary, but also taxes, equipment, training time, and even losses from their mistakes. He urges you to count everything down to the last penny, full calculation of employee costs. Consider not only the salary, but also hidden expenses to understand if the person is paying for themselves. Comparison of costs and revenues. Check regularly whether the employee brings in more than is spent on them, and act if the balance is negative. Minimization of personnel costs. Hire only those who are genuinely needed, and avoid having superfluous people on staff. You have a manager with a salary of 50,000 rubles, add taxes, 15,000, rent for their workspace, 5,000, and losses from their mistakes, 10,000, a total of 80,000. If they bring in 100,000 in profit, they pay for themselves. If 60,000, it's time to say goodbye. The chapter forces you to soberly evaluate the cost of employees and make decisions based on numbers, not emotions. This is the foundation of financial discipline. Rule 4, prove it or perish. Kennedy insists that every employee must prove their worth with specific results. No proof, no place in the company, constant performance review. Regularly demand reports or metrics from employees to see their contribution. No leniency for effort. Good intentions without results are worthless. You need numbers and facts. Rapid elimination of weak links. Don't delay termination if a person is not meeting expectations. You hired a designer who makes beautiful layouts, but clients are not buying them. You give him a month to bring sales up to 5 orders and demand a weekly report. If he fails, you fire him and look for a new one. The chapter teaches tough pragmatism. Either the employee proves their usefulness or they leave. This is a filter for the team. Rule 5, prove it right now. Kennedy continues the theme of the previous chapter, but adds urgency. Proof is needed immediately, not sometime in the future. He believes that slowness in employee evaluation is a waste of time and money. Instant assessment of new employees. Set a probation period with tough tasks to immediately see what the person is capable of. Regular stress tests. Once a week or month, demand that all employees show results. Intolerance for delays. Excuses like, "I need time," are unacceptable. The result is needed here and now. You hired a salesperson and gave them the task on the very first day. Sell 10,000 rubles worth of goods. If they brought in only 2,000 and started making excuses, you don't wait a week. You immediately look for a replacement, and you give current employees a weekly sales report. The chapter speeds up the team filtering process, removing those who cannot deliver results from day one. This is about speed and decisiveness. Overall conclusion for part 1, back to basics. The first part of Ultimate Sales Manager's Guide lays the foundation for a tough management approach. Employees are not people to be coddled, but resources that must generate profit. Kennedy teaches you to look at business through the prism of numbers and results, not emotions or illusions. The chapters in this part show how important it is to calculate costs, demand proof of effectiveness, and not waste time on those who fail. This is the basis for all subsequent ideas in the book, a ruthless but effective start for any manager who wants order and revenue. Part 2, how to get people to work. Rule 6, money solves everything. Kennedy argues that money is the main motivator for employees, and no words or corporate culture can replace financial incentives. He calls for the use of material levers to make people work for results, money as a universal incentive. People work better when their income is directly dependent on their efforts, not on praise or a stable salary. A bonus system for specific achievements. Kennedy advises paying not just for presents, but for measurable successes, such as sales or completed projects. Rejection of equal pay for all. Differentiate salaries so that the best get more and the slackers are left with nothing. You have a sales team. You set a base rate of 20,000 rubles. But for every deal over 10 a month, you add a bonus of 5,000. One salesperson closes 15 deals and gets 45,000. Another closes 8 and remains with 20,000. The chapter teaches you to use money as a management lever, emphasizing that financial motivation is the simplest and most effective way to achieve results. Rule 7, how to get people to be on time. Kennedy explains why punctuality is important for business and how to achieve it. He believes that being late is a sign of disrespect and weak discipline that must be eradicated. Strict rules and fines for being late introduce clear consequences. For example, deducting from the salary for every 5 minutes of delay, so that people are afraid to violate the rules. Personal example of the manager. If you come in on time yourself, employees will be forced to follow your standard. Time tracking system. Use time trackers or logs to record the exact arrival time of each person. In your office, employees are constantly 15 to 20 minutes late. You introduce a rule. For every 5 minutes of delay, a 500 ruble fine. And you always arrive at 9 a.m. yourself. Within a week, everyone starts showing up on time. The chapter shows that punctuality is a discipline that can be instilled through control and consequences. Kennedy emphasizes order. Rule 8, how to get people to do their work. Here, Kennedy discusses how to get employees to fulfill their duties, not just simulate frantic activity. He insists on clarity of tasks and accountability, clear and specific instructions. Give assignments with exact deadlines and success criteria, so there is no room for "I didn't understand." Constant monitoring of execution. Regularly check progress, rather than waiting for the deadline to correct mistakes in time. Consequences for non-compliance. Punish failures from reprimands to termination so people know the cost of inaction. You instructed the manager to prepare a report by Friday. You say, 10 pages, 1 month's data. Submit by 5 p.m. Check a draft on Wednesday and deduct 10% of the salary for missing the deadline. The report is ready on time. The chapter teaches that work is done only with clear goals and strict supervision. This is about management, not hoping for self-awareness. Rule 9, who is really in charge? Kennedy reminds you that in business, you are the boss, not the employees, and you cannot let them dictate terms. He calls for asserting your authority and not being led by subordinates. Establishing authority from day one. Show immediately that decisions are made by the manager, not the team, to avoid revolts. Rejection of democracy in management. Discussions are good for a club, not for business orders, must be clear and without objections. Harsh reaction to insubordination. Quickly suppress attempts to challenge your authority up to termination. An employee demands a raise, threatening to leave. You say, "We pay for results, prove it, we'll discuss." And if they continue to argue, you let them go. The team sees that you don't bend. The chapter stresses the importance of leadership and control over the situation. Kennedy teaches you to be the boss, not the negotiator. Rule 10, secrets of successful control. Kennedy shares practical ways to monitor employees' work so they don't slack off. He considers control the basis of effectiveness. Use simple control tools. Implement checklists, reports, or programs to see what people are doing in real time. Covert control for honesty. Check employees, sometimes unnoticeably, to understand how they behave without your presence. Regularity of checks. Don't make control chaotic, but set a schedule so people get used to accountability. You have couriers. You put GPS on their cars. Ask for a delivery report once a week. And sometimes call clients to check the time. Everyone starts working more precisely. The chapter reveals control as an art that keeps the team on its toes. Kennedy makes it a mandatory part of management. Rule 11, how to keep people from stealing from you. Kennedy warns that employees can steal money, time, or resources and teaches how to prevent it. He believes that you can trust, but only with verification. Strict accounting of resources. Monitor employees' money, materials, and time through inventory and reports. Limitation of access to valuables. Give people only the authority they need to minimize temptation. Punishment for theft without exception. Any violation from petty theft to fraud must end in termination. Your cashier sometimes forgets to ring up goods. You install cameras, check the cash register every day, and fire him after the first proven case. The other employees become more honest. The chapter teaches you to protect the business from internal threats. Kennedy shows that vigilance saves profit. Overall conclusion for part 2, how to get people to work. The second part of Ultimate Sales Manager's Guide is a practical guide to turning employees into a productive force. Kennedy reveals the mechanisms of motivation through money, discipline through control, and business protection from sabotage. Each chapter provides tools from bonuses and fines to checklists and authority so that people don't just show up, but work for results. This is the action part. You take power, set the rules, and monitor their execution, resulting in a working team and growing profit. Part 3, how to hire and fire. Rule 12, how to hire the best and avoid the worst. Kennedy explains how to find employees who will benefit the business and not waste time on those who will be a burden. He emphasizes that the right hire is half the success. Clear criteria for candidate selection. Define in advance what skills and results you need so as not to hire people on a whim. Rejection of emotional choice. Sympathy or a good resume should not influence only proof of competence matters. Use of test assignments. Give candidates practical tasks before hiring to see their real abilities. You are looking for a sales manager. You set the criterion experience closing 20 deals a month. Ignore the charismatic talker without numbers, and give a task to sell you a product during the interview. You hire the one who succeeded. The chapter teaches you to approach hiring as an investment. Choose the best, test them in practice, and do not succumb to feelings. This is the foundation of a strong team. Rule 13, how to find the best workers. Kennedy shares strategies for finding talented employees, emphasizing that they will not come on their own. He advises actively seeking out and attracting those who have already proven their worth. Search among currently working professionals. Poach employees from competitors or related fields where they have already shown results. Use recommendations from reliable people. Ask familiar businessmen or clients about good candidates, rather than relying on advertisements. Create an attractive offer. Offer conditions that will interest the best, a high salary for high results. You need a chef. You find an excellent specialist in a neighboring restaurant. Ask his clients about the quality of the food and offer him 20% more salary for increasing your cafe's revenue. He moves to you. The chapter shows that the best personnel must be actively sought and offered a profitable exchange. Kennedy teaches you to be a talent hunter. Rule 14, how to check a person before hiring. Kennedy insists that a candidate must be thoroughly checked before hiring to avoid mistakes. He offers methods that reveal a person's true potential. Verification of past experience through facts. Contact previous employers and demand specific data on achievements rather than believing words. Conducting stress tests. Put the candidate in difficult conditions during the interview to see how they handle pressure. Analysis of behavior and details. Pay attention to punctuality, manner of communication, and even appearance as indicators of discipline. You are hiring an accountant. You call his former boss and find out that he submitted reports on time, give him a task in the interview to correct an error in the balance in 10 minutes, and consider being late for the meeting a minus. You only hire the verified person. The chapter teaches that verification is a filter that weeds out the weak before they join the team. Kennedy emphasizes facts and trials. Rule 15, how to fire a person. Kennedy explains how to properly and quickly get rid of ineffective employees so as not to harm the business. He believes that delaying termination means losing money. Quick decision to terminate. Do not give weak employees a second and third chance if they are not coping with tasks. Clear and direct message. Say directly, you are fired because you did not deliver results, without unnecessary excuses or sentimentality. Documentation of termination. Follow the law and document the reasons to avoid disputes or lawsuits. Your designer fails to submit layouts on time for 3 weeks in a row. You gather evidence of his failures, correspondence, deadlines, call him in, and say, you are fired for missing deadlines, and process everything according to the labor code. The team continues working without delays. The chapter teaches decisiveness and order in termination. Kennedy shows that quickly getting rid of weak links saves the business. Overall conclusion for part 3, how to hire and fire. The third part of Ultimate Sales Manager's Guide is a step-by-step plan for creating a team that works, not hinders. Kennedy reveals hiring as a science. Find the best, test them in practice, and don't be afraid to offer favorable conditions. And firing as an art, fast, clear, and without regret. The chapters in this part teach you to build a filter for employees, from searching to parting, so that only those who bring in profit remain in the business. This is a guide for those who want a strong team without unnecessary dead weight. Part 4, how to manage yourself and your time. Rule 16, how to manage your time. Kennedy explains that a manager's time is the most valuable resource, which must be protected and used with maximum benefit. He teaches how to organize your day to focus on the main thing. Prioritization of tasks by profitability. Do what brings money or solves key problems first, rather than spending hours on trifles. Day planning with a strict schedule. Create a schedule the day before and stick to it, without being distracted by spontaneous requests. Delegation of all secondary matters. The manager should transfer routine tasks to subordinates to free up time for strategy. You own a store and spend the morning checking the cash register. Now, you set a goal to increase sales. Plan calls to suppliers from 9 a.m. to 11 a.m. and delegate the cash register check to the administrator. Revenue grows, and you don't get bogged down in details. The chapter teaches you to value your time as an asset and use it for business growth. Kennedy emphasizes discipline and focus. Rule 17, how to keep people from stealing your time. Kennedy warns that employees, clients, and even acquaintances can steal your time with unnecessary conversations or requests. He offers ways to protect against such thieves. Establishing communication boundaries. Limit access to yourself. For example, allocate specific hours for meetings and do not answer calls outside of them. Filtering requests through an assistant. Use a secretary or rules like write an email to cut off empty conversations. Firm refusal of distracting offers. You must say no to everything that is not related to your goals without unnecessary explanations. An employee comes in every day to clarify a trifle, taking 20 minutes. You introduce a rule. Questions only by email once a day, and incoming calls are taken by an assistant. Your day becomes freer for important matters. The chapter shows how to protect time from external encroachments. Kennedy teaches you to put yourself at the center of management, not be at everyone's beck and call. Rule 18, how to deal with distractions. Kennedy discusses how noise, notifications, and chaos around you hinder work, and offers methods for their elimination. He considers control over the environment the key to productivity, creating a distraction-free work environment. Remove everything superfluous, from phones to chatty colleagues to concentrate on the task. Allocating quiet hours. Set periods when no one has the right to interrupt you for deep immersion in work. Minimization of multitasking. Do one thing at a time to avoid losing efficiency due to switching. You work in an office where phones constantly ring and notifications flash. You turn off the sound on gadgets, close the door with a do not disturb sign from 10 a.m. to 12 p. and write a sales plan. The task is done faster and better. The chapter teaches you to create conditions for concentration and not succumb to external noise. Kennedy stresses that productivity begins with order around you. Overall conclusion for part 4, how to manage yourself and your time. The fourth part of Ultimate Sales Manager's Guide is a guide for the manager who wants to take control not only of employees, but also of themselves. Kennedy shows that time is the currency of business and teaches you to spend it only on what brings results. Plan, protect, and focus. The chapters in this part provide tools from scheduling and delegation to fighting distractions so that you manage your day, not the other way around. This is about self-discipline that makes you an effective leader capable of leading the company to profit. Part 5, how to achieve maximum profit. Rule 19, how to squeeze the maximum out of every worker. Kennedy explains how to get employees to work at the limit of their abilities so they bring maximum benefit to the business. He focuses on increasing their effectiveness without unnecessary costs, setting high but achievable goals. Give employees ambitious tasks with clear deadlines so they go beyond the usual minimum. Using a reward system for overperformance. Pay bonuses only to those who exceed expectations, stimulating them to greater efforts. Constantly raising the bar. Regularly increase requirements so people don't relax after achieving the first results. You have a salesperson who sells 10 units of goods per month. You set the goal 15 units with a 5,000 ruble bonus for overperformance. And after a month, you raise the bar to 20. Sales grow, and he earns more. The The chapter teaches you to squeeze the maximum out of employees through goals and incentives. Kennedy shows how to turn average workers into productive ones. Rule 20, how to squeeze the maximum out of every dollar. Kennedy explains how to optimize business expenses so that every ruble works for profit. He calls for strict cost control and the search for hidden opportunities. Analysis of all expenditures for effectiveness. Check every expense item and eliminate what does not bring income, even if it seems trifling. Negotiations with suppliers and contractors. Demand discounts or better terms to reduce costs without losing quality. Investing only in proven areas. Money should be invested where there are already proven results, not in experiments. You spend 50,000 rubles a month on social media advertising, but it brings in only 30,000 in profit. You cut the budget to 20,000, negotiate a 10% discount with the designer, and redirect the remainder to a mailing list that pays for itself threefold. Profit grows. The chapter teaches you to save wisely and direct resources where they yield a return. Kennedy emphasizes financial discipline. Rule 21, how to squeeze the maximum out of every customer. Kennedy explains how to increase revenue from existing customers instead of spending effort on finding new ones. He focuses on increasing the value of every interaction, upselling and cross-selling. Offer clients additional goods or services to increase the average check without extra costs. Increasing loyalty through personalization. Build relationships with clients so they return more often and spend more. Price increases for the premium segment. Raise the cost for those who are willing to pay for exclusivity without losing the base. You have a coffee shop and a client orders a latte for 200 rubles. You train the barista to offer a dessert for 150 rubles with it, give a 10% discount to regular visitors, and introduce a premium coffee for 300 rubles. The average check grows to 400 rubles. The chapter shows how to squeeze more profit from current customers through smart sales and care. Kennedy teaches you to see potential in every buyer. Overall conclusion for part 5, how to achieve maximum profit. The 5th part of Ultimate Sales Manager's Guide is a guide to maximizing revenue through 3 key resources: employees, money, and clients. Kennedy suggests squeezing the maximum out of every element of the business, setting high goals for workers, optimizing expenses, and increasing revenue from customers with upsells and loyalty. The chapters in this part teach you to look at the company as a machine where everything must work at peak efficiency without unnecessary spending or sentimentality. This is a strategy for those who want not just to survive, but to earn more with what they already have. Part 6, real life. Rule 22, how to deal with real problems. Kennedy moves from theory to practice, discussing how to solve typical management difficulties, from conflicts to missed deadlines. He teaches you to maintain control in the chaos of real business. Rapid response to problems. Do not postpone resolving conflicts or mistakes, but deal with them immediately so as not to let the situation get out of hand. Use of facts for decision-making. Rely on data and evidence, not emotions, to find a way out of difficult situations. Assignment of responsibility for correction. Delegate the solution of small problems to employees, but with a clear indication of deadlines and results. Your supplier delayed the goods, and clients are complaining. You call in the same day, demand a report on the reasons, and instruct an employee to find a backup supplier within 24 hours. The problem is solved without losing revenue. The chapter teaches you to act quickly and rationally in the face of problems. Kennedy shows that reality requires decisiveness and order. Rule 23, exceptions to the rules. Kennedy acknowledges that hard rules do not always work and explains when an exception can be made. He emphasizes that flexibility is acceptable, but only for the sake of profit. Exceptions only for valuable employees. Make concessions to those who bring significant results, but not to weak links. Evaluation of the benefit of the exception. Weigh whether deviating from the rules will bring more revenue or solve a critical problem. Limitation of the number of exceptions. Leniency should be rare so as not to undermine general discipline. Your best salesperson asks for a day off during the peak season. You check. He closed 50 deals in a month, which is 3 times the norm, and you give him the day, but you refuse the others. The team sees that the reward is earned. The chapter teaches you to balance between strictness and flexibility, maintaining a focus on the result. Kennedy allows exceptions, but with calculation. Rule 24, how to be hard and not be an asshole. Kennedy explains how to remain a tough leader without losing the team's respect. He believes that effectiveness does not require rudeness, fairness, and consistency are enough. Fairness in punishments and rewards. Punish mistakes and reward successes according to clear rules so that people understand the logic. Calm and confident tone. Avoid yelling and humiliation, replacing them with firmness and clarity in communication. Respect for those who try. Support employees who work for results, even if they have setbacks. An employee was an hour late, but they are usually productive. Instead of a scene, you calmly say, 500 ruble, fine, don't repeat it, and you praise him in front of everyone for exceeding the plan. He corrects himself, and the team respects you. The chapter teaches you to combine toughness with humanity, to manage effectively, and not alienate people. Kennedy emphasizes balance. Overall conclusion for part 6, real life. The 6th part of Ultimate Sales Manager's Guide transfers the book's ideas into the real world, where problems are inevitable, rules sometimes bend, and leadership requires finesse. Kennedy shows how to deal with chaos through quick decisions, allow exceptions for the good of the business, and be strict but not cruel. The chapters in this part teach you to adapt the tough approach to live situations, maintaining control and the team's respect. This is the practical conclusion of Kennedy's philosophy. Business is not theory, but action in real-world conditions. Part 7, bonus chapters from Dan's friends. Rule 25, how to manage sales. Dan Kennedy and Bill Glazer. Kennedy, along with Bill Glazer, shares methods for managing the sales department so it brings in maximum profit. They focus on control and motivation of salespeople. Setting daily sales goals. Give salespeople specific numbers for the day to keep them on their toes and track progress. Using scripts to increase conversion. Develop clear scenarios for conversations with clients so that salespeople don't improvise in vain. Strict control of calls and deals. Record calls and analyze every deal to identify weak spots and improve results. You have 3 salespeople. You set the goal 5 sales a day for each. Give a script with phrases like, this offer is only valid today, and check the recordings of their calls once a week. Revenue grows by 30%. The chapter teaches you to manage sales through clear tasks and control. Kennedy and Glazer show how to turn salespeople into a profit machine. Rule 26, how to manage marketing. Dan Kennedy and Jeff Slocum. Kennedy and Jeff Slocum explain how to make marketing measurable and profitable rather than spending money on empty advertising. They call for a focus on direct client response, evaluating marketing by ROI. Calculate how much profit each campaign brought in and eliminate everything that does not pay for itself in the short term. Using direct offers. Create advertising with a specific call to action, such as call now and get a discount. Testing before scaling. Launch small advertising tests to find working ideas and then invest more in them. You spend 20,000 rubles on banners with no result. You switch to flyers with a text, buy today minus 20%, test them for 5,000 rubles and get 15,000 in profit. You scale the campaign to 50,000. The chapter teaches you to make marketing a revenue tool, not a pretty picture. Kennedy and Slocum focus on numbers and response. Rule 27, how to manage finances. Dan Kennedy and Richard Smith. Kennedy and Richard Smith explain how to keep business finances under control, avoiding debt and losses. They emphasize the importance of transparency and saving. Daily accounting of revenues and expenses. Check the cash register and accounts every day to see where money is going and where it is coming from. Rejection of unnecessary spending. Cut all expenses that do not lead to profit growth, even if they seem prestigious. Creation of a financial reserve. Put aside a portion of income for a rainy day so the business can withstand a crisis. You notice that 10,000 rubles a month goes to coffee for the office. You introduce a rule to maintain a daily balance, cancel the coffee, and put that money into reserve. In a year, you have 120,000 for force majeure. The chapter teaches you to keep your finger on the pulse of finances and not spend unnecessarily. Kennedy and Smith emphasize business stability. Overall conclusion for part 7. Bonus chapters from Dan's friends. The 7th part of Ultimate Sales Manager's Guide is a bonus from experts who complement Kennedy's ideas with practical advice on sales, marketing, and finance. The chapters show how to manage key aspects of the business, sell more through discipline, advertise with profit in mind, and count every ruble for stability. Together with his friends, Kennedy creates a system where every detail, from a call to a client to a reserve in the account, works for the result. This is the part for those who want not just to survive, but to strengthen the business through concrete actions. This is such a wonderful book. I have compiled a separate list of all the important theses from this book, along with all the techniques and tools, and created a step-by-step action plan that you can immediately implement in your life. You can get all this in my community, Place of Power. There, you will find a detailed text analysis with similar lists for each book being reviewed. The community has already thoroughly analyzed and made available to you hundreds of world bestsellers with a new analysis released every day. Follow the link in the description and use it.